That's from an email at the foot of the page from yourself, sent on the 21st of June 2015. To whom did you send it?
Chair, I sent this email specifically addressed to Mr. Mgleche from the Supply Chain Services team, and I CC'd Mr. Singh, Mr. Pita, Mr. Gianni, and Mr. Selinga. My review comments were on specific instruction from Mr. Singh to review the proposals and provide my responses. My responses are captured in the email, Chair. I will go through my responses in a bit more detail. The first response was, so these are quite detailed responses, or quite detailed proposals that were received from the bidder. The specific response I'm going to talk about now is with regard to the CNR proposal. The first issue I raised was I told him that increasing the team size does not make sense, considering that the learning curve will mitigate this requirement within a short time. So CNR wanted to increase the number of personnel involved in the transaction, and I said that doesn't make sense, because with the learning curve, you should actually be able to learn a lot quicker, so you don't need extra personnel for the move to Durban. Why would you need extra personnel for a move to Durban? That's what I was trying to get at. The second point I raised was negotiating with suppliers will eliminate the inflationary costs related to the additional 4 months. In any case, material costs generally don't increase on a monthly basis. Thus, the impact should not be as large as, I think it's 1.8%, it's not very clear here. Also, 1.8% for 4 months does not equal 5.5%, but rather 7.2%, which is excessive. So I'm pointing out that this cost is excessive in the quote. The next bullet 3, from the explanation provided, the incremental cost of procurement does not relate to the move to Durban. This should not be charged. In any case, 9% interest is excessive. So the point I'm making there, Chair, is they wanted to charge additional costs for procurement because they're moving the facilities from Johannesburg to Durban. And I'm saying, but that doesn't make sense, because you should have already incurred the cost in your original quote when you were doing it in Johannesburg, so that should not be charged. And then they quoted for interest, which is 9%, and I said, no, the interest rate of 9% is excessive. And nobody charges those type of rates. Item 4, they quoted for additional technical support required in Durban, and I said, the additional technical support requirement in Durban does not make sense. The cost of this technical support should have already been included in the original price of the locomotives. So again, I'm saying, doesn't make sense. You can't ask us, you can't charge for this. Point 5, I said, on-site service technicians should have been included in the original price. So CNR quoted additional costs for on-site service technicians, and I'm saying it should have already been included in the original price. So you can't charge for it again, in other words. Also, they charged 31.5 million rand for travel and relocation, and I said 31.5 million rand for travel and relocation seems excessive. Then I asked the question, we are a transport company, why do they need to use other transporters to transport goods down to Durban? We are a rail company, surely we can use our own rail, and that is the point I'm making in point 6. Can the transport not be done by TFR, Transnet Freight Rail, via rail containers? If so, then insurance costs would also be minimal, as we would be internally insured. As you can see, there's a number of detailed responses I'm raising here. Point number 7, I say that they wanted to charge for shelving, and I responded to say 11,200 rand per square meter for shelving seems excessive. SCS should research this. They need to go and research what the real cost for shelving is in Durban. Point number 8, the point I'm raising here is they wanted to establish a warehouse in Durban. And I'm asking, has consideration been given to a Transnet property or a TFR property warehouse? Because we can use our own warehousing. Why must we go and use someone else's warehousing? We can save costs on that basis. I also asked in point 9, they quoted for additional forklifts. And I asked, why the additional forklifts? You should have, in other words, you should have quoted for forklifts in your original quote. Now, why? Because you're moving to Durban. It doesn't make sense that you need more forklifts because you're in Durban. Point number 10, this is not very clear on my copy, Chair. It looks like it's something, how much is the incentive and relocation cost per staff member? Yes, yes. I'm asking the question, how much is that? Because that was not counted. And on my copy, I can't see 11 as well.
11 is not legible.
I will ensure that the page is replaced, Chairperson.
I'm going to move on to 12 then, Chair. Point number 12 that I raised is the labour inflation rate applied at 5.5% for the full year, whereas the move was only for 4 months. So I said, how can you charge 5.5% for the full year, whereas it should only be for 4 months? And I also pointed out that there was an error in the formula in their sheet there, cell E23 in the staff sheet. I pointed out in item number 13, they would have already quoted for hedging costs. So the additional cost to roll over the hedge must be checked by our Treasury Department to confirm whether it's reasonable or not. Point number 14, I also said that the additional bond costs must be checked by our Treasury Department to confirm if it's reasonable. Point number 15, Chair, I raised there that they've included a cost for contingency risk of 4% and a risk provision of 9% as part of their price. And I raised there that this contingency risk of 4% and the risk provision of 9% is unexplained and seems unjustified. Is unexplained and seems to be additional profit, sorry. This seems excessive. So again, they're charging us profit for something they should not be charging for. Point number 16, I asked that a detailed list of supplies being used in Durban must be obtained versus those in Joburg, so that we can understand why there would be additional cost. If there were already suppliers in Durban, there shouldn't be additional cost for those suppliers in Durban for transportation. Point number 17 I raised was the cost of the long-term maintenance consulting does not relate to the move to Durban. This should not be charged as it should have already been included in the original price. And then lastly, I raised that in their calculations, they double counted the labour inflation in those particular cells. So as you can see, Chair, I raised a number of very pertinent and important issues with regard to the pricing that came through with regard to the move to Durban by CNR specifically.
Mr. Chairman, I see that it's 11:15.
Oh, okay. Let's take the tea adjournment and we'll resume at past. We adjourn.
concerns that you've already mentioned in relation to CNR.
Correct.
74, can you pick up there, please?
Chair, I received a revised CNR proposal on the 23rd of June from Supply Chain Services. I reviewed the revised proposal and I responded then on the 25th of June that the proposal that I received had not changed from the previous proposal except for a new offer of payment terms. So basically nothing changed except for the payment terms. And that was in my response in YL 21, I think.
And then at 75, you deal with Bombardier, BT.
Yes, it goes back to BT did not provide a detailed costing of each item that makes up the additional cost, and the BT cost information is limited and does not allow for a detailed analysis of their costing.
And did you subsequently receive any further proposal from BT?
Chair, I did not receive any further proposals from BT or CNR after that.
So, Mr. Laher, that then completes your main statement, the things you wanted to highlight. Could we then please go to your supplementary statement? As I explained to you, we're going to deal with the main statement and the supplementary statement, and then we will deal with your Rule 3.4 statement. Your supplementary statement you find in bundle 4B. And if I could ask you to turn up page 733. Some of this we've already dealt with, but could I take you to paragraph 12? Could you deal with that, please?
Chair, I've included paragraph 12 into my submission to give a view of what the reporting lines were during the evaluation stage and the negotiation stage. Those are depicted in annexure YL39.
Right, well, let's go to YL39. And that you find at page 741.
Chair, if I can talk through YL39. So if I could start with the bottom right block. Those are the reporting lines during the evaluations. So there were three teams essentially for the evaluations. There was the CFET finance team, which was myself and 5 other individuals. Then there was the CFET technical team, which evaluated the technical part of the tender, made up of a different lot of individuals. And then there was the cross-functional evaluation team that evaluated local content, supply development, and BBBE. So 3 separate teams. We evaluated each of our sections separately, and then we provided our results through to Supply Chain Services. Supply Chain Services, we reported into Supply Chain Services essentially for the evaluations. Supply Chain Services then would consolidate all of the results and then report into the steering committee, and obviously the steering committee would report into Transnet Exco into the board. The decisions were obviously made at the steering committee and board level.
So you were part of the CFET finance team?
Correct.
At the bottom on the left-hand side?
Correct.
Right. And then that relates to evaluations and the position during negotiations?
So during the negotiations, Chair, the top left-hand side block, there were a number of teams that were part of the negotiations. So it was the finance support team, which was two of us, myself and Dani. Then there was the legal team made up of internal legal and external legal. So we had an army of lawyers with us, quite a few individuals. Then there was the supply chain services support team, effectively made up of Mr. Mgleche and Mr. Gianni. And then there was Transnet Internal Audit, who were also part of the negotiation sessions. We reported into the chairpersons of the negotiating team. The chairpersons of the negotiating team were Mr. Singh and Mr. Gianni, co-chairpersons. So on the days Mr. Singh was not there, Mr. Gianni would chair. The most senior person would normally chair. And then the chairpersons would report into the steering committee, or the subcommittee of the steering committee. There was a subcommittee of the steering committee. The subcommittee of the steering committee was made out of 3 individuals, which is Mr. Singh, Mr. Molefe, and Mr. Gama. The decision-making happened at the subcommittee of the steering committee. So any decision that had to be made around this particular tender and negotiations, including price, payment terms, etc., was made at that level. Our role was purely a support role with no decision-making capabilities.
All right, so if you go back to page 734 of your supplementary statement, you've dealt with paragraph 12. You also highlighted previously at page 736, you've dealt with paragraph 17. And what I would ask you to deal with now, and perhaps you can deal with the whole of this section, under the heading Final Consolidation, and in particular the issue of hurdle rates, which is a new thing as I understand.
Yes.
You could deal with paragraphs 19 to 28, please.
Sure. Chair, post the negotiation process, Mr. Singh requested that I put through a final consolidation of the numbers, as well as assist him in making edits to a memorandum that needed to go through to the board, requesting for the increase in ETC from the board-approved 38.6 initially through to the 54.5 billion, including the options. The evidence I present here is with regard to the NPV calculations that needed to be done for that memorandum to the board. And specifically, this evidence I've put into my supplementary statement because I only identified it recently whilst I was participating in giving evidence at the SAICA disciplinary case against Mr. Singh.
So let's just break this down. We're talking about hurdle rates used for NPV calculations. What does that stand for?
NPV stands for net present value calculations. And a net present value calculation would then determine whether a capital investment is viable or not. If it's positive, it's viable. In other words.
And what is a hurdle rate?
A hurdle rate would be the interest rate used to discount the cash flows for the NPV calculation.
And do I understand you to have said that you gave this evidence about the hurdle rate used for the NPV calculations at Mr. Singh's SAICA inquiry?
Correct. Correct.
Please carry on.
I'm at paragraph 20 now. So as part of obtaining the required inputs for the memo, Mr. Singh requested that I contact Mr. Kellard in order to obtain an updated net present value number, as Mr. Kellard had performed the original net present value calculations. As instructed, I contacted Mr. Kellard on the 21st of March. Mr. Kellard responded on the 23rd of March, essentially indicating that if the hurdle rate for the original NPV calculation that was presented to the board of 18.56% was used, the NPV would become negative, which effectively meant that the whole project is not viable. Shortly thereafter, obviously Mr. Singh thought us, Mr. Singh told me that the hurdle rate actually changed from 18% to 15%, and that the NPV would become positive if the new hurdle rate of 15% is used and adjusted. So I then, Mr. Gama sent an email to ask the question, why is the NPV negative? I responded to Mr. Gama in a nutshell to say that the Transnet hurdle rate has been changed from about 18% to about 15%. It changed last week, I think, based on what Mr. Singh told me. So basically just relaying the message. And a copy of that email is attached. The background behind this is that the policy owner for the WACC rate or the hurdle rate is the General Manager Group Financial Planning. I wanted to get that right. The General Manager Group Financial Planning. And the General Manager Group Financial Planning at Transnet reports into the Group CFO. So they effectively reported into Mr. Singh. And this policy sponsor for the WACC rate was Mr. Singh, and as he was the Group CFO. So at that point in time, I was not involved in developing or utilizing the WACC rate. So I didn't know that there was going to be a change in the WACC rate, and I took his word for it and explained to Mr. Gama that the reduction from 18 to 15% was what's coming, and obviously sent that to Mr. Kellard to ask him to update his calculations based on the revised hurdle rate. The final WACC policy was actually only signed off on the 20th of May 2014, way after that, backdated to 31 March 2014. So the evidence I'm bringing forward to the Commission this, which I don't think has been brought to the Commission before, is that it's possible that Mr. Singh deliberately influenced such that the hurdle weight should be reduced in order to ensure that the NPV remains positive.
All right. Then that ends off on what you wanted to deal with in your supplementary statement. Could we then go to your Rule 3.4 statement? But perhaps it's most convenient first just to look briefly at the Rule 3.3 notice that you received. That you find at the beginning of the file. If I could ask you please to go to page 503.1. So this is the 3.3 notice that you received. Would you confirm that?
Yes?
And at paragraph 5, you advised that the evidence of Mr. Kellard, which implicates you or may implicate you in the above allegations, is set out. And there's only 5 paragraphs, 60, 64, 67, 197, and 211. And you were then provided with a copy of that statement, and you were told that the relevant annexures were 17, 18, and 18A. Is that right?
Correct.
I'd like just to place the evidence that you're going to give now in context. I'd like to go to those 5 paragraphs in Mr. Kellard's statement, starting with paragraph 60, which you find at page 503.17. Are you there?
Yes?
So in this paragraph, Mr. Laher says that on 21 March 2014, I and colleagues in finance received an email from Yousuf Laher with spreadsheets of the final cash flows as at 17 March 2014. I was shocked and astounded to note that the advanced payment guarantee for the CSR 100 was 30%, the design review 30%, payment on acceptance per locomotive 37%, and retention 3%. This translates to a 60% upfront payment before a single locomotive is received. Now, paragraph 60 then appears to relate to the 100 locomotives, is that correct?
Correct.
Not to the 1064.
No, 100.
And it relates to spreadsheets dealing with cash flow on the 17th of March, and in particular the upfront payment.
Correct.
So that's 60. If we go to paragraph 64, Mr. Laher says that on 15 April, I was asked by Laher to assist in updating a memorandum from Malefe to BADC on the increase in the ETC of the acquisition of the 121E locomotives. The memorandum requested a recommendation by BADC to the board for an increase in the ETC of the 100 locomotives from 3.871 billion to 4.840 billion. The increase was approximately R1 billion or 25%. So this also relates to the 100 electric locomotives.
Correct.
And here, whereas the first issue related to the upfront payment, this issue relates to the increase in the ETC.
Correct.
Then if I can take you please to paragraph 67. Mr. Kellard records, subsequent interrogation of the memorandum from Laher, however, raised the following question. Paragraph 5A of the memorandum states, foreign exchange rates, the rand has depreciated by 10.7% against the Japanese yen. This has impacted the expected price of the locomotive as per the business case and ultimately the ETC as approved by the board by approximately 10.74%. This is most unusual as the Japanese yen would be associated with Mitsui, a Japanese company, and not CSR, a Chinese company. Further, the cash flow spreadsheet reflects USD for CSR. From the ownership of these documents and spreadsheets, Singh and Laher should talk to this anomaly. So this is really, or let me ask you, it seems again relates not to the 1064, but to the 100 electric locomotives.
Correct.
And this is really an issue relating to exchange rates.
Correct. Yeah.
And currency.
Currency. Yeah.
Currency. So those three paragraphs, 60, 64, and 67, electric locomotives. Let's go then forward, please, to paragraph 197.
Page or paragraph?
I beg your pardon, page 503.54, Chairperson.
Okay.
And there one finds paragraph 197. Records that I was part of a team, this is Mr. Kellard, that primarily comprised Yousuf Laher, Mohammed Mullah, Executive Manager Finance, Freight Rail. Others participated, but in a secondary role. Our brief was twofold: to show conclusively that forex hedging and escalation were included in the business case, and reconcile the 38.6 billion of the business case to the contracted amount of 49.55 billion. This was a task that you undertook together with Mr. Laher, and it related to whether a correct report had been made to the board.
Yes, correct. Initially, the report to the board in 2013. Yeah.
Yes. Now, you take note, I mean, I don't suppose are implicated here. You simply mentioned as being part of this team, and you accept that you were and you undertook the work.
Correct.
So 197 is not particularly important. Let's then go to the final paragraph where you are said to be implicated, and that is paragraph 211 at the foot of page 503.58. But just for the sake of completeness, paragraph 197 now deals with the 1064 locomotives.
Correct.
Paragraph 211, Laher is the primary author of these two Excel spreadsheets of 17 March 2014. Laher is a signatory to the BAFO evaluation of 15 January 2014 and was furthermore a member of the negotiating team for the 1064 locomotives comprising inter alia Malefe, Singh, Gama, Picha, Gianni, etc. Is that correct?
Correct, yeah.
That's what you are allegedly implicated on that basis. Now, these spreadsheets of the 17th of March 2014, we're dealing here with the 1064 locomotives.
Correct.
Now, although you are said to be implicated in paragraph 211, if you have a look at paragraph 208 at page 503.57, Mr. Kellard says, on examination, I could not credit that the figures in the spreadsheet were a true reflection of the real cost of the locomotives for the following reasons. So at 211, Mr. Kellard contends that you, the primary author, but importantly, and I raise this because it's something that you then quite correctly deal with in your Rule 3.4 statement, not only does he say you're the primary author, but at 208, he's then critical of the content of those spreadsheets. 211 has a sub-paragraph, which you find at page 503.59. It would also appear that you were implicated here. It's something that you deal with, With this knowledge, I was disappointed that the exercise undertaken in January 2018 was in good faith, but Laher, with full knowledge of the pricing details and negotiations, chose not to share his knowledge, including the spreadsheets and evaluation reports, with the members of the team to arrive at an honest and accurate assessment of the increase in ETC from 38.6 billion to 49.55 billion, or 54 billion if options are included. So there, the contention is that you did not share your information. That relates also to the 1064F locomotives. Correct. All right. So with that then, by way of background, let us turn to your Rule 3.4 statement, which you find at page 504. Are you there?
Yes.
And if I could direct your attention to paragraph 6 at 505, you state in the Commission's notice, I was advised by the Commission that paragraph 60, 64, 67, 197 and 211 of Mr. Callard's statement implicate me. We've dealt with that. Mm-hmm. Then I want to take you to the heading at the foot, towards the foot of page 506. There's a heading there, 100 locomotive tender. You see that?
Yep.
And what you say over the page at paragraph 18, that I deal with paragraph 60, 64 and 67 of Mr. Callard's statement in the paragraphs that follow, because those were the three paragraphs that implicate you in relation to the 100 locomotive tender.
Correct.
And what you do then in this part of your statement is you start out with a heading, pertinent facts related to the 100 locomotive deal.
Correct.
And if I could then take you forward in that, when you get to paragraph 35, you then deal with paragraph 64, Mr. Callard 64.
Yes.
And then if I could take you please to paragraph 36, the next paragraph, but go over the page to 511. It's in that paragraph that you deal with Mr. Callard's paragraph 67.
Yes.
And then if you go over the page to 512, you will see at 42, you deal with Mr. Callard's paragraph 60.
Correct.
So this section running from 19 to 42, you set out pertinent facts relating to the locomotives, and in that context you deal, albeit not sequentially, numerically, but you deal with all three of those paragraphs, 60, 64 and 67. Could I then ask you please to take the chairperson briefly through this section, and in the process of doing so, address those three paragraphs?
Sure. Thank you, Chairperson. So I will start with paragraph 19, Chairperson. This is with regard to the pertinent facts, which provide some context to the 100 locomotive deal and my specific involvement. So during the 1064 negotiation process, which took place in February, March 2014, I was asked by Mr. Singh, or informed by Mr. Singh, to help Mr. Gianni with the finance-related negotiations for this 100 locomotive deal. And he also told us at that stage that the board had approved a confinement for 100 locomotives to CSR. At that point in time, it took me by complete surprise because we were involved in 1064 negotiations, and I'm wondering, why do we need an extra 100 locomotives? But in any case, he said it was approved by the board. We needed an extra 100 locomotives. It's been confined to CSR. So we provided financial support to Mr. Gianni. These negotiations took place in the same place where the 1064 negotiations took place. I wasn't officially appointed. It was just, Dani, you and Yousuf go to that room and help Mr. Gianni. So it took place at Webo Ensel's offices in Lobo. It was recorded. TIA were involved in the entire negotiation process. The same process, we would report into the co-chairpersons. The co-chairpersons would report into the steering committee. The subcommittee, that steering committee is the committee that makes the decisions, including pricing as well as the payment terms. We were just a support team to Mr. Gianni. Mr. Singh and Gianni ran the overall process of negotiations. During the negotiations, we would respond to bidders directly if we had issues to raise, but most of the time, the responses would be through the chairpersons. As I said, the negotiations included Transnet internal audit, as well as supply chain services in those sessions and the co-chairpersons. The negotiation process, like any other negotiation process, is offer, counter offer, and it went along those lines. So whilst we were busy with the negotiations, Mr. Singh asked me to prepare a reasonability calculation for these particular locos. So in 2012, we purchased locomotives from CSR, which is a year or two ago, and we knew what the pricing for that locomotives were. So what he asked me to do is say, okay, if you know what the pricing for that locomotive is in 2012, you do your own calculation, you tell me what you think the pricing for this locomotive now in 2014 should be. I conducted the calculation accordingly. I went and did some research to see what the pricing of that locomotive was, and I came to a figure of 41 million rand for that particular locomotive. My calculation is referenced in Annexure YL24. My calculation was primarily based on the, should we go to YL24 just to show the movement?
Right, we'll deal with the paragraph first and then we can go there.
So my calculation was primarily based on taking the price of the 20E locomotive that was purchased in 2012, knowing what the exchange rate for that locomotive was in 2012, and adjusting for the change in exchange rate between 2012 and 2014, as well as increasing the cost of that locomotive for escalations between 2012 and then, so for inflation, etc. Then I would add in items that were provided to us by CSR, which is items we didn't know about. This was a higher spec locomotive, so it wasn't exactly the same locomotive as a 20E. It was a bit more powerful locomotive. So there would have been additional design costs, additional variations, and I think there were additional hedging costs and setup costs. So I added in those costs into the calculation to get to my 41 million. That was the only way I could rely on this information, was the information I got from CSR. That calculation is in YL24.
Yes. So YL24, you find at page 548. Is that the calculation?
That's the calculation, yes, Chair. So essentially what's reflected on this calculation is the base price for the 20E locomotive in 2012 was 28.8 million rand. The exchange rate used in 2012, on the 22nd of October 2012, was 8.635 rands to the US dollar. The exchange rate, whilst we were doing the negotiations in February 2014, was 10.9. So essentially, I calculated the exchange rate impact based on those parameters, as well as calculated the escalation for the South African portion and the US dollar portion of that locomotive, and then added in the additional items as per the CSR quote for variations, hedging costs and duties. And I also took out 1.5 million for the setup cost, because my view was the setup cost should have already been incurred if they're using the same production line. And that's how I got to my price of 41 million rand. I then presented that 41 million, I'm back in my main statement. I'm back at my statement. I then presented that calculation to Mr. Singh and Mr. Gianni as a benchmark to use for the negotiations. When we started the negotiations, Mr. Gianni pitched at a price of 38.5 million. So he told CSR, we want a price of 38.5 for these locomotives. CSR disagreed and wanted a price of 49 million. It was a to and fro for a long period of time, and eventually we never agreed to anything. They didn't want to budge on their price, and obviously we didn't want to budge on our price. A day or two later, Mr. Singh comes into us and says, Mr. Molefe has approved a price of 44 million rand for these locomotives. So there obviously must have been some other negotiation happening in the background. And based on that, he then, I responded to him to say that, but the Mitsui quotes was cheaper. And he responded to me to say, it's already been approved by the board that we're going to go with CSR, so it doesn't matter what the Mitsui quote was. That's on paragraph 29.
So can I just ask you, this CSR tender, was that done on confinement?
It was done in confinement, correct?
Chairperson heard all the evidence about initially there was an award to Mitsui, and then there was a change of confinement, and ultimately it went to CSR.
Yes.
So when you say here, I pointed out to Mr. Singh that the Mitsui quote was cheaper, it's in that context,
Correct.
the historical context.
Correct.
Yes, carry on. What were you told?
So, sorry, I forgot to mention in paragraph 28 that Mr. Singh told us that Mr. Molefe approved the price of 44 million as well as the payment terms, which is what Mr. Kellard refers to as the payment terms. And he instructed the lawyers to draft the contract accordingly. On paragraph 30, I raised with the bidders, in my view, the pricing was, they were pointing out that 49 was excessive and it was too high. And also raised my concern that they were using the incorrect exchange rates to determine their prices. Subsequent to that, I also raised with Mr. Singh that, and I particularly pointed out to him that CSR were using the incorrect exchange rate to determine their price. And because they were using the incorrect exchange rate, they were adding an additional 2.4 million rand per locomotive to the price. His response to me, to what I raised with him there, was this again is a process of negotiation, and you win some, you lose some, and it's the overall price that's important. And in his view, the price of 44 million rand was reasonable, considering that the risk that CSR are willing to take with it. In light of Mr. Singh's seniority and expertise and experience, I deferred to his explanation that he provided to me. Continuing further, post the negotiation process, I just want to raise that Mr. Singh was very senior at that point in time. He was GCF. I was 2 levels below him at that point in time. And I had to respect his opinions and respect his views. If I continued, it would have been insubordination to him. He was a member of the board, etc., etc. I don't even know if you know that in those days, he was awarded the CFO of the Year in South Africa award. So he was a man of stature. So when he spoke, he was authoritative and he spoke, he knew what he was saying, so you had to respect what he was saying. So just the context in terms of why I accepted what he had to say to me. It wasn't unreasonable what he was saying at that point in time. Post the negotiation process, Mr. Singh then explained to me principal elements he wanted included in a memorandum that needed to go to the board to request for an increase in the ETC from the initial pricing. I think it was 3.4. I could be wrong with the price to the 4.4 billion, and detailing the reasons for the increase in price. He also then explained to me the detail of the format he wanted the numbers presented in for this particular memo to the board, and he requested that I type that up into a draft memorandum that was already prepared. I received the draft memorandum from our Transnet Group Capital Department, so this was not my normal function. It was not what I normally do. It is done by another department. So they prepared the draft memorandum. They sent it through to me. Mr. Singh then made edits to that, and there's in his handwriting there is evidence about the edits that he made. I think the handwriting is captured in one of the annexures. I'm trying to see what annexure it is. Oh, sorry, YL 15. YL 15 is the handwriting. Over a period of time, Mr. Singh was very pedantic with the wording of this particular memorandum, and he was very pedantic with the 1064 memorandum as well. And over a period of time, over 1 or 2 months, he made numerous changes, and he asked me to make those, or type up those edits into the memorandum for him. I don't understand why he asked me, because I had another job to do at that point in time. I wasn't working in his office, but he used to call me to come to my office today at spur of the moment. You couldn't really say no to him because he was the big boss. Drop whatever you're doing and go and do whatever he wants to do. hand over what you've done and move over again. So I even question, why am I doing this? Because, I mean, it's really a secretarial function. I can put the numbers together, which is what I did, but the typing up handwritten notes was, I couldn't see why I was doing it.
Just whilst we on that, Mr. Laher, you talk about some handwritten notes from Mr. Singh. Which you say are attached as Annexure YL15. Well, that's YL15 to your main statement.
Correct.
Perhaps you could just go back there because they may be of significance. So if you could go back to file or bundle 4A, and if you could turn all the way, please, to page 402. That's, sorry, under the last tab. There you should find Annexure YL15. Are you there?
Yes.
This series of handwritten notes, firstly on Weber Wenzel's notepad, and then some on plain paper. What are these notes?
Chair, these are the handwritten notes of what Mr. Singh wanted incorporated into the memorandum that would go to the board. These notes incorporated his notes on both the 1064 memorandum that went to the board as well as the 100 memorandum that went to the board. I think specifically, Chair, I want to point out specific evidence, and maybe if we can go to page 408 and 409.
Yes.
Where you can see wording around the increase in ETC has resulted for the following reasons, and then he explains the reasons. So to show that he's thought this through, and these are his reasons for the increase in ETC. Basically, this is what he wanted me to capture into, or type up into the memorandum. If you go to the next page, which is 409, and Chair, I'd like to refer to the actual memorandum, and you'll notice that word for word, what is written here, it's word for word in the actual memorandum. And we can go to the actual memorandum. I just don't know which annexure it is.
Yes, we'll come to that.
So what he says there, sorry, Chair, is the first wording, and just so that we can remember when we get to the actual memo. The Financial Risk Management Framework, FRMF, approved by the board, does not permit the accepting forex exposure on committed transactions.
All right, well, Mr. Laher, let's leave that page open for the moment at page 409 in file or bundle 4A. Let's go back to your your Rule 3.4 statement at bundle 4B, page 510. You had explained to the chairperson at paragraph 34 how this happened. You've referred now to the notes. And ultimately, I take it that a memorandum was then produced.
Yes.
And you say a copy of this memorandum dated 23 May 2014 is attached to the statement as Annexure YL25. Let's go to that. You find it at page 550. Is this the memorandum?
Correct.
So if you look at it, it says it's to the Board of Directors and it's from Brian Molefe.
Correct.
You had been preparing it, though, on behalf of Mr. Singh.
Correct.
And the purpose of the memo is recorded at paragraph 1 for the BOD to note of the reasons for the increase in the ETC, and then to request that body to approve the increase.
Yes.
From 3.871 billion to 4.840 billion.
Yes.
If you turn forward, this is quite a lengthy document. It concludes at page 563, and that was ultimately the recommendation.
Yes.
It was recommended by Mr. Singh and Mr. Garma, and then signed by Mr. Molefe.
Yes.
You wanted to tell the chairperson, if you still have open, page 409 of the handwritten notes in file or bundle 4A. You want to cross-refer?
Thank you. So, Chair, if you look at on page 555, bullet point number 25, okay.
Yes.
Okay, so bullet point number 25, if you cross-reference page 409 of the first bundle to page 555 of the second bundle, specifically bullet point number 25, the wording, the financial risk management framework, FRMF approved by the board does not permit Transnet accepting forex exposure on committed transaction is word for word, as you can see in his handwriting. The second paragraph, the SARB also does not permit SOX to accept open exposure on foreign currency contracts. You can see it's word for word. The third, then there's another paragraph where it says consequently, which is the bullet 28. Consequently, the cost of foreign currency hedging to mitigate and protect the company against foreign currency devaluation is an inherent cost of the transaction. So those are all, I'm not going to go through all of them, Chair, but you can see it's word for word. He basically wrote it out, and all I did was the secretarial function of typing it in.
All right, now we come to the important paragraph 35 in your Rule 3.4 statement at page 510. This is where you now deal with paragraph 64 of Mr. Callard's statement. Please take us through that.
So at paragraph 35, Chair, on page 510, Mr. Singh then told me to contact Mr. Kellard and request that he update the net present value number that was required for the memorandum. I sent the draft memo to Mr. Kellard. This is the memo.
So just so that I understand, this is then before the memo was completed.
Correct.
So while 25 is the completed memo,
Correct.
paragraph 35 deals with the process of completion.
Correct.
All right, carry on.
This is the memo that Mr. Kellard refers to in paragraph 64 of his statement. Mr. Kellard prepared the NPV for the original business case and then duly provided the NPV for the memo. Mr. Kellard raises issues there, but the issues he raised in his statement, at no stage did he raise those issues with me or raise any queries about the draft memo or its contents, including the issues he raises in his statement to the Commission about the use of the yen to rebaseline the price, the increase in ETC,
Yes,
or
but
the pricing.
Just hang on a moment. Mr. Kellard in paragraph 64 simply deals with the increase by R1 billion of the ETC. That's what he's dealing with. Now, insofar as he's implicating you, what is your response to that?
Sorry, repeat that question again.
Mr. Kellard seems in some other way to be implicating you in relation to the increase in R1 billion of the price.
Yeah.
What is your crisp response to that?
So, number one, I would not have approved the price. Number two, I didn't have the delegation to approve the price. Number two, that was approved by the steering committee. So I cannot be responsible for something I cannot approve. Number two is, where it relates to the increase in price, I raised the issues, as you've heard in my statement. I raised issues about pricing to Mr. Singh and during the negotiations where I voiced out that I was not happy with the price myself. I was provided with a reasonable explanation at that point in time, and therefore my view is that question in terms of the price should be asked of the steering committee in terms of why they accepted the price. And remember that negotiation was done not where I was present, so I don't know how the price was agreed to. We were told afterwards this is the price that was agreed to.
And insofar as you were involved in the production of the YL25 memorandum, do you consider that significant in any way?
Obviously, if the pricing the memo is significant in the sense that it requests an increase of the ETC from the board. So, yeah.
And was that your own memorandum?
No, it wasn't my memorandum. The memorandum was, as I said, it started at the Transnet Group Capital Department. It's part of a standard process. The normal process in requesting ETC, there's a department that deals with this. It's called the Transnet Capital Department. They deal with all the approvals required for a request in the ETC, and it would go through the normal approval channels. The normal approval channels would be to go through an investment committee, etc., etc. They prepared the draft memorandum, so I received the draft memorandum from the Transnet Group Capital Department first. Then I was asked to update or insert edits to that memorandum that I received, and also obtain information from other parties. So I got information from Mr. Kellard specifically for the NPV, and whoever else needed to provide inputs into that memorandum. The bulk of the memorandum was Mr. Singh basically saying what goes into the memorandum. The inputs I provided was the walk forward part, which we will come to in that particular memorandum, where I did the calculation in terms of the walk forward from the 34 to the 44 million rand.
Right. So do you have anything else to say in answer to Mr. Kellard's paragraph 64?
So in terms of 64, I cannot be held responsible for the price where it is not my accountability. And also I was not involved, I never made the decision. So he's completely wrong where he's trying to hold me accountable for something I cannot be held responsible for.
All right. Then at paragraph 36, you have a lengthy paragraph which culminates then in an answer to Mr. Kellard's paragraph 67. Can you deal with paragraph 36, please?
Sure. So, Chair, this is the issue Mr. Kellard raised about why was the yen rate used to do the walk forward of the pricing, as well as an explanation of what a walk forward is. So, Chair, two things. I will go through an explanation of what a walk forward is in terms of the definition of a walk forward, because when Mr. Kellard was presenting, he was presenting the definition of a projection, not a walk forward. There's a difference between a walk forward and a projection. If I can explain, a walk forward starts with two givens. You have the first given, which is the price of 34 million, which was in the memorandum we referred to earlier, and we can go back and I've highlighted it in the memorandum. And then it's the final price that was agreed to of 44 million. Those are two givens, fait accompli. You cannot change those. That was presented to the board and signed off. This is what was contracted for. A walk forward would then say, okay, you've got 34, you've got 44. How do you get from 34 to 44? That's a walk forward. A projection is you have a starting point, and then you need to project into the future in terms of what it's going to be, where you don't know what the future outcome is. This is you already know what the future outcome is because you've been given the final number. So that's the difference between a walk forward and a projection. I think that was the confusion whilst he was presenting. The second thing around specifically the walk forward, so the walk forward would entail taking the 34 million and walking it forward to the 44 million. It would entail taking the elements that make it up. So, for example, the elements that would make up 34 to the 44, similar to what I presented earlier in my own calculation, would be the escalation costs, the hedging costs, the variations, etc., etc. I would take each of those elements and I would walk it forward from the 34 to the 44. The reason why the yen rate was used, and maybe I should just go a bit more slower through the process in my statement, and then I'll come to the reason why the yen rate was used. So Mr. Singh asked me to prepare that walk forward from the business case price, and I explained what the walk forward is about. Mr. Singh also then explained the assumptions used in the business case. Chair, the reason I point that out is because I was not involved in the business case. So I don't know what the assumptions were. I don't know how they got to that number. I came in cold because I was given this right at the end. So here's the business case number, now do the walk forward. So he told me what the assumptions were. He told me how they got to the business case price. And he asked me to walk forward that price for the business case through to the information, or based on the information that CSR provided, through to the final 44 million. The method that he asked me to do the rebaselining or the walk forward was not unreasonable. It's a normal financial way of doing things. He explained to me the assumptions also, the assumptions that were used in the business case. So, for example, the assumption used in the business case was a rand-yen rate of 0.098823. And that's, as I say, fait accompli. It's in the business case, it's written, it's not something you cannot change. So he explained to me that's in the business case, and pointed it out to me in the actual wording of the business case. He also explained to me that the business case was based in yen, and that the price must then be escalated in yen because the business case is based in yen. That's not unreasonable as well. It's normal financial principles. If you're given something, you work with what you're given. You don't make assumptions to change it because that exposes the calculation to unnecessary complication and risk of miscalculation. Then, whilst he was pointing all of this out to me, I asked him the question, surely there's more than one currency involved? His response to me was, no, the business case was based in yen, therefore do the calculation based on the yen rate. Accordingly, I complied and did the walk forward calculation based on the yen rate. So from that perspective, I think Mr. Kellard, when he presented his evidence, he didn't understand how to do it financially, and he didn't, well, I'm putting words in his mouth, but my view is he didn't understand how to do the financial walk forward, and there's a difference between a walk forward and a projection. Chair, if you'll allow me, maybe I can put it in simpler terms, because he was saying, why not use the dollar? It's a Chinese company, why using the yen? My response to that is, I don't know why they used the yen rate in the business case. I wasn't there. I wasn't involved in the business case. That was done way before I got involved. So that question must be asked of the people that put the business case together. The second question is, okay, even if that's the case, then why did you continue to use the yen? And I'm saying it's not unreasonable to use the yen because that's how you would do it. When you are given a fait accompli, you're given something, you can't change it. If I can give a simple example, if Johnny is asked to, or you're told, Johnny ran a race. Johnny ran the race, he started at 10 a.m., he finished at 11 a.m., and the race was 10 kilometers long. You're asked to calculate the speed that Johnny traveled at. Because you're given kilometers and you're given time, your answer is going to be kilometers per hour. Now, if you are told that the race was meant to be in Johannesburg, but Johnny eventually ran the race in England, where they use miles per hour, why would you change your calculation? Your answer is still in kilometers per hour. If you had to do it in miles per hour, because that was the brief was, give me the answer in kilometers per hour. If the brief was going in miles per hour, then you would go and try and do a recalculation. But obviously doing a recalculation is convert kilometers to miles, which then complicates the whole transaction. So always stick to the brief and do the calculation with the inputs that you are given. There's no need to go and complicate the calculation by using another currency and doing a cross-currency conversion, because you're not going to get the correct answer. And for me, this is a reasonable basis of doing it.
So what Mr. Kellard said at 67 in the second part is that this was most unusual, as the Japanese yen would be associated with Mitsui, a Japanese company, and not CSR, a Chinese company. You've answered that.
Yes.
And then he says further, the cash flow spreadsheet reflects US dollar for CSR.
Yes.
And he says, from the ownership of these documents and spreadsheets, Singh and Laher should talk to this anomaly.
Yes.
What do you say about the fact that the cash flow worksheets reflect US dollar for CSR?
So the cash flow worksheets are based on what was finally agreed to with CSR. So that's post-negotiation. Remember, the business case is pre-negotiation. It's something that's fait accompli. It's given to you already in yen. Cash flow is now after you've already negotiated, and these are the cash flows for the locals that CSR are going to deliver. When CSR provide the cash flows, they give it to you in US dollars, and that's why you have a US dollar cash flow, and then the business case is in yen. As I said, I can't answer why it was in yen, but that's what was given to me. Correctly, if it was done properly, whoever created the business case should have said, we're contracting with a Chinese company, it should be in yuan or in dollars, but that was not done. So you can't go and change what's already on a piece of paper signed off by the board. It's there already.
All right, and then you, at the end of paragraph 42 at page, at paragraph 42 at page 512, you deal with paragraph 60, and that's the upfront payments. You want to move towards that? Is there anything else that you want to deal with? You've dealt with paragraph 36, you've provided your explanation or your answer as far as you're concerned to Mr. Kellard's paragraph 67.
Right.
Do you need to deal with 37 and 38, or can one go to the heading advanced payments?
We can move on.
All right. So let's go to the heading advanced payments at page 512, which culminates in the statement that you make at paragraph 42. Do you want to deal with that, please?
Yes, Chair. Chair, so if we move on to paragraph 39, so I will deal with the paragraphs 141 to 152 as well, because what Mr. Kellard raises in paragraph 60, he raises as well on the 1064, paragraph 141 to 152, even though he doesn't implicate me in the paragraph 141 to 152. And I just want to provide further input on with regard to the advanced payments. So it's common knowledge that the management of Transnet's long-term and short-term funding and cash flow is a function of the Transnet treasurer. And the Transnet treasurer reported into the GCFO. At that point was Mr. Singh. I can't recall who was the Transnet treasurer at that point in time. Also, I was not involved in the management of Transnet's cash or funding. During the 1064 and the 100 locomotive transaction, Mr. Singh, who was effectively in charge of the Treasury Department, told the negotiating team that Transnet had the funding available and that the advance payments were affordable to Transnet. I did not have the delegation to accept the advance payments proposals from bidders. The subcommittee of the steering committee accepted the advance payment terms, and they accepted the pricing of the locomotives. I agree, the quantum of the advance payments would put a strain on Transnet's funding and cash position should the rail volumes as envisaged in the market demand strategy not materialize. So in conclusion, I don't know why Mr. Kellard's directing that question at me, because I was never accountable for treasury function. There is a treasurer that deals with it, and as part of the negotiating team, Mr. Smith was a representative as well. Mr. Singh was the overall accountability for the treasury function and the overall accountability for Transnet's cash flow position. So he would be accountable, and he needs to answer that type of question.
Now, this advanced payment guarantee, was that something dealt with in the memorandum that you prepared on behalf of Mr. Singh?
I can't recall.
Is it part of the contract, or is a advanced payment guarantee, is that something that comes afterwards? Is it a separate negotiation?
So the guarantee is a document which the bidders would sign to say, we guarantee the advance payment. Normally a bank would issue the advance payment guarantee. The advance payments, which Mr. Kellard refers to, is the actual payment that was made. So, rands or dollars paid to the suppliers. And those payments would be made before delivery of the locomotives.
Mr. Kellard says at paragraph 60 that he was shocked and astounded to note that the advanced payment guarantee for CSR 100 was 30%. What is your simple answer to that?
Mr. Singh said they were affordable and that Transnet had the funding to afford those advance payments, firstly. And secondly, the advance payments were agreed to as part of the package deal, if I can call it, by the steering committee. So when Mr. Singh told us that the steering committee accepted the price of 44 million, he also said they accepted the price of 44 million with the advance payments that go with it. So those are decisions that were made at that level in terms of the advance payment.
So were you involved in making this decision?
No, not at all.
Now, Mr. Kellard, at paragraph 60, this stems from the fact that he and some colleagues received an email from you with spreadsheets of the final cash flows.
Yes.
So he gets this from the spreadsheets of final cash flows.
Yes.
Just address that issue. Did you populate those spreadsheets?
So with regard to the cash flow spreadsheets, we would have received cash flows from the bidders, but Mr. Dani, who was also involved, would have populated the cash flow spreadsheets whilst we were busy with the negotiations. And he needed those in order to work out what the cost of the foreign exchange hedging would be. So he would have populated those spreadsheets for the cash flows. Yes. And in some cases, maybe I would have helped him populate the spreadsheet. And the population would have been done based on what the bidders submitted to us. Say, these are our cash flows.
So let's then move on. So those are the three paragraphs, 60, 64 and 67, relating to the 100 electric locomotives. You've explained to me during consultation that you could actually draw a line above the heading 17 March negotiation spreadsheets at the foot of 512.
Correct?
Because from here onwards, you're now dealing with the 1064 locomotives.
Correct.
Whereas previously you'd been dealing with 100 electric locomotives. You say at paragraph 43 at the foot of 512 that in the paragraphs that follow, I deal with paragraphs 206 to 215 of Callard's statement. Now we know that paragraph 211 then falls in between that. And 211, you will recall, deals with your Excel spreadsheets of 17 March. This is different from the cash flow spreadsheets. These are your Excel spreadsheets of 17 March relating to the 1064 negotiations. He says you were the author. He says the information contained in them, he finds it difficult to believe that it's true and correct. And also, there's then a criticism of you not sharing this information in time. So this section then deals head on with the March 17 negotiation spreadsheet. And if you turn forward to page 512, you will see that at paragraph 49, you actually then address paragraph 211. And further on in your statement, at page 515 at the foot, you start dealing with paragraph 208. 56, you deal with 208.1, that's where he questions the accuracy of the information. 57, you deal with 208.2, 58, 208.3, and so you go on all the way to 62.
Yes.
Where you deal with 208.7, and then you come back to paragraph 211, and then over the page at 64 you deal with 211.1, and we can then stop above paragraph 65. Is that correct?
Yep.
So what then remains for you to do is to essentially take the chairperson through paragraphs 43 to 64, dealing with this issue.
Sure. Thank you. Chair, if I can move to paragraph 44 on page 513. So the explanation, I think there's a lot of context and background that's required.
So you're moving to what paragraph?
44.
Yes.
A lot of explanation and background which with regard to the spreadsheets that needs to be provided. So firstly, there's two spreadsheets. There's one for diesel and there's one for electric. The second part to understand is these spreadsheets were created over a period of time. So within a spreadsheet, if you understand a spreadsheet, there are tabs at the bottom, which we call worksheets. So within the spreadsheet for diesel and electric, there were many tabs at the bottom of the spreadsheet. And those tabs, if I can name them, one would be called base cost, one would be called base cost excluding TE, another one would be called negotiations, and each of them had different calculations within them. So let's start with the tab marked base cost. So to understand, before we even get to the tab marked base cost, understand there were many spreadsheets prepared. So even though there were two, which are dated 17 March, prior to the two dated 17 March, there are many spreadsheets before that. So whilst the negotiations were ongoing, we prepared spreadsheets as and when new pricing came in. So for example, and I know there's an annexure for that, I think it's annexure YL26, where I give you a view of the numerous number of spreadsheets which were prepared over the period of the evaluation and negotiation. I don't know, Chair, if you want to go to YL26 now, or should we come back to it?
I'll come back to that.
Okay. So understand there's many spreadsheets, firstly. Secondly, within the spreadsheets, there's a number of tabs. If I explain further, if you look at the tabs within the spreadsheet, the tab marked base cost, that tab spreadsheet or worksheet was prepared during the evaluation phase. So that was prepared in November 2013, where there were 6 people evaluating. Each of those 6 people had access to that tab, and each of those 6 people would capture information within the tab. The information that is captured within the spreadsheet comes from bidder submissions. It's not something we pluck from the sky. There would be documentation, and that's again attached in my Annexure YL 27, where I provide the evidence of the bidder documentation that correlates to the numbers in the spreadsheets. So I know it sounds a bit complicated, but very simply, number of spreadsheets, tabs within the spreadsheet. The base cost tab was prepared during evaluations. The base cost excluding TE tab was prepared during the evaluations. Then the tab marked negotiations was prepared during the negotiations. The tab marked negotiations, there were many spreadsheets that were prepared for that. The spreadsheet Mr. Keller refers to are the final spreadsheets that were finalized on the 17th of March. So just to give you some background behind it. Chair, I think I've dealt with 44 and 45.
Just before you move on, you wanted to take the chairperson to YL 26. That you find at page 565.
On page 565, that's a screenshot of the spreadsheets that were created during the tender. And you'll notice there are a number of spreadsheets there. This is only one of a section of the portion of the hard drive that contain these spreadsheets. So if you note, there is sort of 1, 2, 3, 4, 5 down. There's a file called Negotiation Diesels 5 March. Then there's another file called Negotiation Diesels 10 March. Then there's another file, Negotiation Diesels 12 March. Then there's another one, Negotiation Diesels 17 March. That would be the final one. Also, there's another one called Negotiation Diesels 18 Feb and 27 Feb. So we created these spreadsheets as and when we were getting new pricing proposals from the bidders. And these spreadsheets were effectively a recordal of what the bidders were giving us in terms of the pricing, whilst the negotiations were going on. Thanks, Chair. That's YL 26.
And you've told the chairperson, if one goes back to page 513, at paragraph 46, that the spreadsheets referred to by Mr. Kellard, the March 17 spreadsheets, were then the final version of them.
Correct, yeah. They were the final versions of these spreadsheets. I think I've explained paragraph 47, Chair. In terms of...
Can I take you to 48 and ask you, who was responsible then for populating and keeping these spreadsheets?
Okay, so we start with the evaluations. There were 6 people responsible for populating that spreadsheet. Do you want me to name them, or is it fine?
Yeah.
Okay, so the members of the team, the cross-functional evaluation team finance that did the evaluations were Mr. Muller, Mr. Valley, Mr. Taletsi, Mr. Danny Smith, Mr. Tabu Siapi, and myself. That's the 6. So in total, we would have populated the sheets. Any one of us had access, and any one of us would have populated those sheets within the spreadsheet. That relates to the sheets we populated during the evaluations, i.e. the sheets marked base cost and base cost excluding TE. Continuing, for the sheet mark negotiations, there were 2 of us involved, myself and Mr. Danny Smith, and either one of us could have populated the information into those sheets. Chair, on paragraph 49, to also understand that the master version of these spreadsheets was stored on a master computer, and that master computer was kept by Mr. Mgleche. We didn't have the password to that master computer. They would supply chain services would log us in at the start of the day, and they would log us out at the end of the day. So it is clear, Chair, in response to Mr. Kellard's statement in paragraph 211 that I was the primary author, is completely wrong. I was not the primary author. I was one of the authors from a team of 6 in the evaluations and a team of 2 in the negotiations.
So that I understand this term author, from what you've explained, Doesn't seem that there was any author, it was more a data capture function, is that correct?
Correct, 100%. Yeah. And when I go through YL 27, I'll explain that portion.
Yes, please carry on.
So now we're at paragraph 50, Chair. So as I was saying, the information that is captured on these spreadsheets were obtained directly from bidder submissions. So it is not something we plucked from the sky, and I will show you the evidence in when we get to Annexure YL 27 in terms of where the information comes from. Paragraph 51 deals with the same thing I said earlier in terms of the information on the negotiation worksheet were also obtained from bidder submissions. And when I get to take you through YL 27, I'll also show you how the information correlates to the information from the bidders. I think paragraph 52 is important, Chair, in that it's not the spreadsheets that determine the final price. The spreadsheets were the recordal. The determination of the final price was based on the outcome of the negotiation process in terms of what was approved or what was accepted by the subcommittee of the steering committee for the locomotives. So Mr. Kellard is incorrect when he talks about the spreadsheets determining the final price. They didn't determine the final price. It was merely a recordal of what was given to us during the negotiations to keep track. And the recordal was to keep track. So you have to keep track daily of what's happening. So we record it so we can, manage what is being provided to us over a period of time.
All right, so in paragraphs 50, 51, and 52, you refer to a series of annexures, starting with 27. You mentioned 27, 28, 29, and 30 in all three of those paragraphs, correct?
Yes, correct.
Can I ask you, and I understand this is what you wish to do, by way of example, go to Annexure YL 27. That you find at page 567.
Ready?
Yes, please go ahead.
Chair, if you look at page 567, you will notice bidder 1 Bombardier is the bidder we're specifically referring to here, which is the first column or the third column from the left. It says bidder 1 Bombardier, unescalated. Okay. You'll notice that this was prepared during the evaluations, and if I take you then with your finger still on page 567, because this is the spreadsheet Mr. Kellard refers to, where he says that the numbers are incorrect, with your finger on page 567 to move to page 578. As background, you will notice, and sorry to be running you around like this on all the pages, there's a number of pages here.
This is hardly legible, huh? At 578, except for the numbers on the right, the middle column.
Yes. So maybe we should start at page 569 to give context.
569.
Yeah. So on page 569, you'll notice, Chair, this is a submission from Bombardier dated 21 November 2013 to Transnet. This was the submission from Bombardier as part of the tender evaluation process. So they would have submitted this document and we would have evaluated this document. This was the document we used for the evaluations. As we move on through the pages, they submitted many items in this document. And page 570, 571, 572 are just responses to clarification questions we asked specifically to Bombardier. If we move on right through to page 578 was the original documentation that was received from Bombardier as part of their tender submission. So I want to show you how the numbers correlate. So these, just to prove that these numbers are not made up, the first number you see on the top there in row number 1 on page 578, 28788,150. That number correlates exactly to page 567 under row number 1, base price, as per technical specification, 28788,150. The next line, line 2, engineering support cost, ties up exactly 619,100. The next line, special tooling, 3762, ties up exactly 3762. You will note that the fourth line, which is 491240 on page 578, does not correlate exactly to line 474880, and for that, there's a specific note in terms of why that number does not correlate, and I will take you to that calculation. Just try and find it in this batch, Chair. Oh, so if you look at page 568, note number 1.1, this is the actual spreadsheet we used. This is part of what the evaluation team wrote. This is with the notes from our workings. The note says the capital spares were reflected as 491240, which is the number you see on page 578. This includes both Schedule A and Schedule B spares. Schedule B was removed and price changed to 474,880. We had to remove Schedule B because Schedule B was not meant to be part of the spares for these locomotives. And that's how we got to the number of 474,880. Continuing, Chair, you'll notice that the remaining numbers should tie up. 45302, it ties up. 1238200 ties up. 27405 ties up. And then 309550 ties up. You notice that on the original bid, Bombardier did quote for hedging costs, but the evaluations were not done with hedging, so it was excluded from here. The option realignment is captured on Annexure YL35, and there was a specific calculation in terms of how to realign the options, but I'm not going to go through that detail. With regard to the exchange rates that you see quoted there, so you will note on Bombardier's proposal, they quote an exchange rate of, or the number that we calculated on the top there, 32,722,350 on page 567.
Yes.
Yeah. That number, if you multiply that by the declared import percentage of 30.2%, which is further down the page, and you divide that by the exchange rate as provided in the declared import percentage, you get to the euro 979069. This was a calculation done by the evaluation team at that point in time. So that's where basically the numbers from the base cost sheet come out. Mr. Kellard also then refers to another sheet, and I'm going to move on to show you where the remaining numbers come from. If we can go to page 579 then. Sorry, Chair, still with your finger on page 567.
Yes.
You will note that this spreadsheet or this worksheet is base cost excluding TE. This was also put together during the evaluations by the team of 6, and these numbers again correlate exactly to what I would have showed you earlier, and the only difference is when we did the second sheet, which is called base cost excluding TE, we would have excluded the cost of TE based on the decision taken by supply chain services there for us to do the evaluation excluding TE, the point I mentioned earlier on. So if you look at the letter from Bombardier, which is on page 584, you will note the letter dated 4 December 2013, and specifically towards the bottom of the letter under point 1, where Transnet asked Bombardier, what would the rand be impact on your price per locomotive be if you did not use TE as a local subcontractor for 599 cocoa, but used an alternative local private sector subcontractor? And you note they quoted a figure of 1905514. So with your finger still on the original page 567, you'd note that the number there was 32722-350, right on top, that the first line. That will then correlate if you go to page 579. There's a note on the right-hand side in handwriting, which is called C. So if you look at the note called C, 32722-350 correlates, minus the 1905514, which is the number that was quoted by Bombardier in the letter I just showed you now. And that equals a number of 308,66836, which is the number on the sheet, which correlates to the number 308,66836. Again, proving that these numbers all come from somewhere. They're not made up, and there's science behind it. And it comes from, is a recordal of what's been given to us.
Right, Mr. Laher, I'd like to move on, if I may. It might have been that you could have presented this evidence in a slightly clearer way. The chairperson might very well ask you for a schedule now, where you put out the figures and then you cross-refer for us where you find it. Are you able to do that?
I can do that.
So that we don't need to jump around from one document to the other. I'm going to afterwards ask you to provide us with that schedule. But the long and the short of your evidence is that there was no manipulation. This was a data capture exercise, and the figures were taken from original documents.
Correct.
Proposals made by the bidders.
Correct.
That's what you say.
Correct.
Right. Let us then go, please, to page 514, paragraph 52. You've dealt with that. Is there a need to deal with anything else before we get to paragraph 208? Paragraph 53 is something which I know is featured in other of your affidavits. Is it something you want to reiterate?
I think it's important. Yeah, I'd like to reiterate.
Yes,
Thank
please
you.
go ahead.
Just to say, overall, the impression I gained during the negotiations was that the co-chairpersons, Mr. Singh and Mr. Gianni, were very much focused on the overall price, whereas Mr. Smith and I, who were very detail-oriented, were more focused on the detail pricing. So items like escalation, batch pricing, etc., they weren't very focused on those. So even though the detail elements may have been spoken about at various times during the negotiations, it was not their main focus. The effect of this was that in as much as these components were self-standing components of the negotiations, in the end, it was the overall price that the chairpersons focused on. And then the subcommittee made the decision on the final pricing. My view, I would have preferred if we focused on the details so that we could, debate those properly, but that was not their focus.
Can we then move to paragraph 56?
Yes, please.
So I've already explained to you that Mr. Callard's paragraph 208 must be read together with 211, because in 208, he really, in effect, queries various of the figures and information contained in the spreadsheet. And he does that over the space of 7 subparagraphs. From paragraph 56 to 62, you address those 7 subparagraphs. It seems to me that ultimately your answer is the same for all of them. Is that correct?
Correct.
And what is that? So Mr. Kellard says, well, here is a potential query or an inaccuracy in relation to A, B, C, D. What is your answer, your overall answer?
The overall answer, Chair, as you've seen from the evidence I've prepared, is that the spreadsheets were a recordal of information we received from bidders. There was no manipulation of the numbers within the spreadsheet. I think the principal point is the pricing was not determined by a spreadsheet. The pricing was determined by the negotiation process and what was agreed to by the steering committee. And it's not the spreadsheet that you should be picking on. You should be throwing stones in the wrong direction, in other words. Yes, there might have been issues with the pricing, and yes, I also raised similar issues, as I've explained earlier. I raised issues about escalations, I raised issues about the batch pricing. So my view is, Mr. Kellard may have a point, yes, which is the same points I raised with my superiors. I voiced my concerns, but it's not the spreadsheets that are the problem. The spreadsheets were just a recordal. So again, he's throwing stones in the wrong direction.
So at 56, you say, with reference to paragraph 208.1 of Kellard's statement, and there he was raising the issue of cost escalations. You say the cost escalations as captured in the spreadsheet were obtained directly from the bidder submission.
Correct.
And then 4 lines, if you go to page 516, 4 lines from the end of that paragraph, you say, to the extent that Mr. Kellard is insinuating that the escalations were inflated, I never inflated any escalations, I simply recorded the breakdown, etc.
Yes.
And paragraph 57 then deals with 208.2, this time a query about foreign exchange component, and you essentially make the same point and you rebuff the insinuation.
Correct.
Paragraph 58 deals with the costs of reduced batch sizes. You make the same point and you then contest the insinuation.
Correct.
Okay.
With the background that I did also raise the same issues during the negotiations with my superiors.
And 59 and 208.4 deals with the local content requirement, and so you explain that and you contest or you deny the insinuation.
Correct.
208.5 deals with the sidebar calculation. Essentially, your evidence is the same.
Yes.
208.6 deals with negotiation price recon. Your evidence is the same.
Yeah.
And 208.7, the negotiation worksheet.
Yes.
You deal with that and you dispute the insinuation.
Correct.
Then at paragraph 63, you say that, or perhaps I can ask you to deal with it.
So paragraph 63, Chair, deals with, again, the insinuation that I was the primary author. And as I've mentioned earlier, there were 2 of us involved in the negotiations from a finance perspective and 6 in the evaluations. So again, I deny that I was the primary author. I was 1 of 6 and 1 of 2. So I was not the primary author.
And then finally, this is the last paragraph that you say you want to deal with, and I'd like to get it done before lunch so that you could be released. Paragraph 64 deals with Mr. Kellard's 211.1, where he says that you weren't forthcoming with information. Would you deal with that, please?
Sure. So on paragraph 64, Chair, with regard to Mr. Kellard's insinuation that I deliberately and without just cause withheld information from him, I think it's important to understand that, firstly, as part of a normal tender process within Transnet, the rules are you sign a confidentiality agreement. The rules are, and it's part of a standard tender process, you don't provide any information around that tender to anybody that has not received express permission to get that information, and unless that person has also signed a confidentiality agreement. At that point in time, when I was dealing with Mr. Kellard, which was in 2018, I was just following the rules in terms of standard Transnet confidentiality rules. I signed the agreement. If I did give him any information, which is confidential information to Transnet, I could be held to account. So that was the first reason I could not give it to him. The second reason I could not give it to him is because I didn't have it. How can I give him something I didn't have? I didn't have the evaluation reports at that point in time. You will note in my evidence, I asked for the information in June 2018, which is 6 months after that, and I only received it then in June 2018. So, Chair, I mean, that's my response. I mean, I told him I cannot give you confidential information and we need to ask for it through the right channels. Eventually, he got it through the right channels. And in the evidence I lead, and I think it's in YL 34, I even provide an example of where we asked for the information from supply chain services.
All right, and as I understand it, you didn't want to deal with anything further after the end of paragraph 64.
Yeah.
Mr. Chairman, with your leave, could Mr. Laher be released and then return tomorrow at 10 o'clock so as to afford him an opportunity to study the evidence given by Mr. Callard in reply to his Rule 3.4 statement? There is, of course, a transcription of that, and I will then ask him questions in relation to that tomorrow morning at 10 o'clock.
Okay, no, that's fine. So he will be released, Mr. Laher, and then come back tomorrow at 10 o'clock to deal with the rest of the issues. Thank you very much for coming.
Thank you, Chair.
You are excused. Mr. Maybeck, what is the situation after lunch?
Well, the situation is that we do have Mr. Callard on standby.
Yes.
I have raised with you, Mr. Chairperson, whether you wish to hear from Mr. Callard or simply to admit his affidavit. You will recall that Mr. Callard has frequented this commission on more than one occasion.
Yes, yes.
He gives evidence about two things.
Yeah,
The one is the video and transcription that Mr. Laher has already dealt with.
yes.
The rest of his new evidence relates to what he describes as the regiment's price walk.
Yes,
That's all he will testify about,
yeah,
if you allow that. And apparently, as I understand it, he won't be more than an hour.
yes.
We could
Well-
fit him in tomorrow if that's more convenient for you.
Well, if you are inclined that it should be enough to admit his affidavit, I would be inclined to ask the same thing. Because, as you say, he has given evidence quite a few times.
Yes.
Yeah, and of course, if anything later arises that we didn't foresee, we can always be in touch with him.
Would it then be necessary for you to admit it is part of our bundle, or what do you have in mind?
I'm sure it can be admitted as part of one of these bundles if that's convenient. But yeah, I think there should be no problem in admitting.
Yes, it's bundle 4B, Chairperson. It's the second last tab,
Yes,
exhibit BB4H.
yes, I've got it.
And you will see that it's a short affidavit. There are some
Yes,
annexures. It was signed by Mr. Callard on the 14th day of September. If the chairperson requires us, we could call Mr. Callard simply to confirm that this
Yeah.
is his affidavit, and then it could be formally admitted.
yeah, let's do that. You are excused, Mr. Laher. You are excused.
I now might be getting ahead of myself. I don't know if he's here. I know he's coming here at 2 o'clock. I'm not sure he's still here.
Okay, maybe then we can adjourn and then come back at 2
And deal with it on that
and
basis.
deal with it on that basis. Yeah.
Thank you, Chairperson.
Okay, all right. We'll adjourn for lunch and resume at 2:05. We adjourn.
Just when you need a witness to get out of the
nothing else but the truth? If so, please raise your right hand and say, "So help me God."
So help me God.
Thank you. You may be seated.
Thank you, Chairperson. Mr. Callard, would you go to the second last tab of bundle 4B, please?
I have BB4H.
And then can you turn, please, to page 795,
795.
the document headed Fourth Supplementary Statement. Is that a statement of yours?
It is.
Could I ask you, please, to turn forward to page 802?
800. Sorry. I am there.
Did you sign the statement under oath on the 14th day of September this year?
I did.
And attached to your statement is a series of annexures. They are set out and listed at page 803 to 804. Those annexures then run from page 805 all the way to 920. Would you confirm that?
I do.
Mr. Chairperson, with your leave, I would ask that Mr. Callard's fourth supplementary statement commencing at page 795 be admitted as exhibit BB4 in brackets little h.
Yes, no, thank you. And for the sake of completeness, you confirm, Mr. Collett, that the contents of this fourth supplementary statement are, to the best of your knowledge, true and correct.
Sorry, Mr. Chair,
You confirm the correctness of the contents of your fourth supplementary statement?
I confirm the correctness thereof, yes.
Yes, okay. Mr. Mybeck, it's BB4, F point.
BB4 in brackets little h, Chairperson.
Oh, okay. Only.
Yes.
Okay, all right. The fourth supplementary statement by Mr. Francis Quentin Collett, starting at page 795, is admitted as exhibit BB4 in brackets H.
Thank you, Chairperson.
Thank you very much, Mr. Collett. I hope we won't need to ask you to come back. You have been coming here for too many times, but if there are compelling reasons, we will ask you, but I hope not. But thank you very much.
Always available, but thank you, Chair.
Thank you. You are excused.
Thank you.
And then tomorrow, Mr. Mybeck, we have Mr. Laher at 10, who might take how long, do you think?
He won't take long, I don't suspect, Mr. Chairperson. And after that, the next witness we have is Mr. Mklangu, who's due on Friday.
Oh, okay, okay. Okay, all right. Okay, we'll then adjourn for the day, and we'll resume tomorrow at 10. We adjourn.
All